The fear and greed index just hit 9. That's the second lowest reading in 3 years. And while retail investors were dumping, wallets holding between 10 and 10,000 Bitcoin quietly accumulated 61,568 BTC in a single month. That's $4 billion of buying happening in silence. Here's exactly what the on-chain data is telling us right now. Bitcoin is holding the $66,000 level, but the market feels terrible. The fear and greed index is at 9, extreme fear. The total crypto market cap sits at $2.38 trillion. Geopolitical tensions are elevated. U.S.-Iran conflict is entering a new phase, which is pushing risk assets lower broadly. On the surface, this looks bad, but surface level is where retail gets shaken out. Here's what's actually interesting. On-chain data shows wallets classified as whales and sharks. Those holding between 10 and 10,000 Bitcoin accumulated 61,568 BTC over the past 30 days. That's a 0.45% increase in their total holdings. Simultaneously, exchange outflows are exceeding inflows. That means coins are leaving exchanges and going into cold storage. That's not the behavior of people who are planning to sell. That's the behavior of people who are planning to hold through the pain. Historically, when this divergence appears, retail fearful, whales accumulating, it's preceded major upward moves within 60 to 90 days. There's a separate story happening that most people are sleeping on. TRON has now overtaken Ethereum in daily USDT transfer volume. TRON is processing $4.2 billion in stablecoin transfers every single day, compared to $2.8 billion on Ethereum mainnet. TRON now represents 58% of all Tether supply. And this week, Anchorage Digital, the only federally chartered crypto bank in America, announced it's adding TRON support. That's institutional infrastructure being built on a chain most people dismissed 2 years ago. Here are the specific dates driving markets over the next few weeks. April 3rd, non-farm payrolls. Analysts are expecting unemployment to tick up to 4.5%. A weak jobs number is bullish for crypto because it signals the Fed has more room to cut interest rates. The Clarity Act vote window is approaching. Senator Lummis confirmed revisions are being finalized. This bill includes protections for DeFi developers and legalizes stablecoin yield. If it passes, it removes the single biggest regulatory overhang on the entire sector. And SEC Chair Atkins told Crypto America the tokenization innovation exemption could arrive within weeks. That would unlock institutional tokenized asset markets. Let me give you the clean takeaway. The on-chain data is clear. Smart money is using this extreme fear window to accumulate. $4 billion of Bitcoin moved off exchanges into cold storage this month. That doesn't happen when whales are planning to exit. Key support is at 64,000. That's where the on-chain cost basis clusters for recent buyers. A break below that would be more concerning. Key resistance is at 72,000. That's where most short-term momentum traders will be looking to take profits. The macro headwinds are real, but the on-chain picture is telling a completely different story than the headlines. Keep watching the jobs data on April 3rd and the Clarity Act progress. Those are your two biggest signal events. If you found this useful, subscribe to Truth for weekly on-chain analysis. We cover what the data shows, not what the headlines say. If you found this useful, subscribe to Truth for weekly on-chain analysis. We cover what the data shows, not what the headlines say.